Welcome to HouseLux Estate, your go-to channel for all things investment. Here, we make the complex world of finance simple and accessible. Whether you're a seasoned investor or just starting out, we've got something for you. Today, we're shedding light on a subject that's often overlooked, yet holds tremendous potential for stable returns: government bonds. Investing is not just about building wealth, it's about securing your future and creating opportunities for growth. One of the key tenets of investing is diversification, and government bonds provide an excellent way to diversify your investment portfolio. They offer a unique blend of stability and steady returns, making them an attractive choice for many investors. In this video, we'll guide you through the process of investing in government bonds, demystifying the jargon and breaking down the steps into comprehensible chunks. So, whether you're a pro investor seeking to diversify or a newbie looking to dip your toes into the investment world, you're in the right place. Stay tuned as we delve into the steps of investing in government bonds. Before investing, it is essential to understand what government bonds are. So let's dive right into it. A government bond, in its simplest form, is a loan. But instead of you lending your money to a friend or a bank, you're lending it to the government. In return, the government promises to pay you back with interest after a certain period of time. This period can range from a few months to several decades. But why would a government need to borrow money? Well, just like any individual or business, governments also have expenses: building infrastructure, funding public services, or even managing national debt. To cover these costs, they issue bonds. Now, you might be wondering how government bonds differ from other types of investments. Unlike stocks, where you own a piece of a company, buying a government bond doesn't give you ownership. Instead, you become a creditor to the government. So what's the allure of government bonds? The primary draw is their stability. Government bonds are considered to be among the safest investments around. This is because they are backed by the full faith and credit of the government that issues them. In other words, unless the government goes bankrupt, you're guaranteed to get your money back plus interest. Another benefit of government bonds is their predictability. The interest rate is fixed, meaning you'll know exactly how much you stand to earn when the bond matures. This makes them an excellent tool for planning long-term financial goals. However, it's important to remember that with lower risk comes lower returns. While government bonds are safer, their interest rates are typically lower than those of corporate bonds or stocks. In a nutshell, government bonds are a type of investment that provides a steady, albeit lower return. They're ideal for investors who prioritize security and predictability over higher but riskier returns. Now that we understand what government bonds are, it's time to discuss how to invest in them. First, we need to prepare for the investment process. Just as you wouldn't dive headfirst into a pool without checking the water's depth, you wouldn't dive into investing without some preparation. One of the first steps in preparing to invest in government bonds is setting up a brokerage account. Think of it as your gateway to the world of investing. It's where you'll buy and sell your bonds. Many financial institutions offer these accounts, each with their own unique features and benefits. It's crucial to do some research and select a brokerage that aligns with your investing needs and goals. Speaking of goals, it's imperative to have a clear understanding of your investment objectives. Are you investing for long-term growth, or do you need a steady income stream? Perhaps you're looking for a safe place to park your money. Government bonds can serve all these purposes, but knowing your goals will help you choose the right bonds for you. Next, let's talk about risk tolerance. This is a fancy way of asking, how much uncertainty can you handle? Government bonds are generally considered low-risk investments, but they're not entirely without risk. Inflation, for example, can erode the purchasing power of the fixed interest payments you receive from bonds. Understanding your risk tolerance will help guide your investment decisions. Last, but certainly not least, is doing your homework about different government bonds. Not all bonds are created equal. Some are issued by the federal government, others by state or local governments. Some are short-term, others are long-term. Some are tax-free, others are not. The more you know about these differences, the better equipped you'll be to make informed investment decisions. With these preliminary steps completed, we are ready to start investing. Remember, the journey of 1,000 miles begins with a single step. And in investing, these preliminary steps are the first stride towards a more secure and prosperous financial future. Now, let's get to the heart of the matter: investing in government bonds. Investing in government bonds is a process that can be broken down into a few simple steps. First things first, you'll need to decide on the type of bond you want to invest in. There are several types of government bonds available. Treasury bills, notes, bonds, and savings bonds are all options. Each comes with its own set of features and benefits, so it's important to do your research and choose the one that best aligns with your financial goals and risk tolerance. Once you've decided on the type of bond you want to invest in, the next step is to determine how much you want to invest. Remember, the minimum investment for most government bonds is $100. However, the more you invest, the greater your potential returns will be. So consider your financial capabilities and investment goals when making this decision. Now comes the part where you actually buy the bonds. There are two main ways to do this. One option is to buy them directly from the government through the Treasury Direct website. This is a straightforward process. Simply create an account, choose the bonds you want to buy, and make your purchase. The other option is to buy through a broker. This can provide you with more flexibility and access to a wider range of bonds, but it may also come with additional fees. After you've made your purchase, it's time to sit back and wait. This is the part of the process where patience really pays off. Government bonds are not get-rich-quick schemes. They are long-term investments designed to provide stable returns over time. So, while it might be tempting to cash in your bonds as soon as they start earning interest, resist the urge. The longer you hold on to your bonds, the more they'll earn. And finally, there's the process of earning returns. The interest on government bonds is typically paid semi-annually. This means you'll receive payments twice a year until the bond matures. At maturity, you'll receive the face value of the bond in addition to any remaining interest. This is the moment you've been waiting for, the moment when your investment pays off. And there you have it, the steps to start investing in government bonds. It's a journey that requires research, decision-making, patience, and a bit of financial savvy. But with these steps in mind, you're well on your way to making a wise investment in your future. Remember, investing in government bonds is not just about the potential returns. It's also about contributing to the stability and growth of our nation's economy. So go ahead, take the plunge, and start investing in government bonds today. Let's go over the key points we discussed today. We started by defining government bonds, an integral part of our financial ecosystem. These are essentially IOUs issued by the government to fund its various projects, an investment opportunity that you, as an individual, can take advantage of. They offer a safe and stable return, a feature that makes them a popular choice among conservative investors. We then moved on to the benefits of investing in government bonds. The most prominent advantage is the assurance of returns. When you invest in a government bond, you're essentially lending money to the government. And since the government is the issuer, the chances of default are next to none. This makes government bonds a low-risk investment. Additionally, they provide a steady stream of income in the form of regular interest payments, which can be a reliable addition to your income. Next, we discussed the preliminary steps to investing in government bonds. It's crucial to do your homework before diving in. Understanding the different types of bonds, their maturity periods, interest rates, and the impact of market conditions are all important factors to consider. Always remember, knowledge is power in the world of investing. Finally, we delved into the process of investing in government bonds. We learned that you can purchase them directly from the government or through a broker. The process involves setting up an account, choosing the type of bond you wish to invest in, deciding the amount you want to invest, and making the purchase. It's a straightforward process, but it's essential to stay informed and make well-informed decisions. And there you have it, an overview of what government bonds are, the benefits they offer, and a step-by-step guide on how to invest in them. With careful planning and prudent choices, government bonds can be a valuable addition to your investment portfolio, providing stability and steady returns. Thank you for joining us today on HouseLux Estate. Don't forget to subscribe for more investment tips and tricks. Until next time, happy investing.